AMD released their Q2 22 earnings last night, and as you can see, it's down by 5.35% after the earnings release, which, if we look a bit deeper, from a top line perspective, we got a beat. From a bottom line perspective, we got a beat. So what we want to understand is, why is the stock dropping? And then secondly, is this a buy the dip opportunity or starting a new position on AMD? So if we have a look at what CNBC reported on their earnings, so effectively they smashed their earnings or they hit their expectations. And in this market environment, hitting your analyst estimates generally has been sending the stock price up. Same thing for Apple, same thing for Tesla. It's all, and PayPal is up, 10%. Pre-market as well. But the reason why AMD is down after hours is because their forecast for the third quarter is now below the analyst estimates. And then again, I'm not going to go through this article, but they blame it on, headwinds in the macroeconomic environment, all those kind of different things, which, most companies have. But in AMD's earnings release, they put this pretty much up front to kind of state this. And if you put the bad news up front, it's overshadowed the good news that we've seen with the Q2 results. So this could potentially help us if you are an AMD investor or looking to invest in AMD, thinking that the stock price is down by 5% pre-market, and it will probably be down by 6-7% and probably flatline throughout the trading day today. Should we be looking to buy AMD? So for those of you who are members and subscribe to the channel will know that when I look at a stock, especially a stock which is profitable, I like to use intrinsic value investing analysis. And what I like to use is my OGT intrinsic value indicator. And again, it's absolutely free. There is a tutorial video down below and in the top right corner. But if you want this, click the TradingView link below, head over to indicators, and then type in OGT. And you'll see I've got a number of indicators and there's playlists around all of these, but you're looking for the OGT intrinsic value indicator. And what this does, it sets out and projects over the next 5 years the fair value of any stock that has a positive earnings or EPS number. And that's because the model it uses an earnings valuation model. There are other models like cash flow and things like that. TradingView, they do have cash flow numbers in there, but they don't have free cash flow, which is what's needed to kind of build out that model. So very, very quickly, what we need to do is we need to plug in what we think that the earnings growth is going to be for AMD to really plot the fair value line. And the good thing about this indicator, it gives you a low assumption, a medium assumption, and a high assumption. So you can plot 3 different intrinsic value lines on here, and it's not a static one line. So you've got ranges to play with, because we know that fair value isn't static, it isn't a hard fixed line, it's within ranges. So the best way to kind of get this information, or to get a good enough information or guide around EPS, future EPS growth rates, is to use analyst estimates and use them as kind of your highest assumption and work backwards from there, because analysts aren't always right. So the way we do that is we head over to Yahoo Finance, you type in your ticker symbol, you head over to the analysis tab, and then you scroll all the way down to the bottom, which has the growth estimates. And what we're looking for is the next 5 years per annum. So this is the per annum growth rate for AMD, which we have 28.10%. So that's going to be our highest assumption earning number. So what we need to do in the input section is we need to, again, put in your EPS annual growth rate for the next 5 years. So that's 28.1%. And again, I've just worked my way down. Again, I've not really thought about it that much, but obviously I want it to be lower than the highest assumption. So I've gone with 20 and I've gone with 15. The next bit I'm going to scroll down to the bottom is to understand the multiple within 5 years. So in terms of understanding what multiple should AMD be trading for relative to its earnings. And the best way to kind of do this is to have a look at historical averages. So if I go to, and you can go to AMD PE ratio history, and I think it's the first one on Y charts is the kind of best one to kind of use. And if you scroll down to the right hand side, it's got the averages over the past 5 years. Now, AMD has always, like most tech companies, has been trading quite rich, and as you can see, has had anywhere between a minimum of 27 and a maximum of 343. And if you look at the low, yeah, so the low is going to be 27.39. So again, I like to play worst case. The higher the number you put in there, the higher the multiple you are giving this stock. And what we want to do is go as low as we possibly can without being unrealistic. And generally, what I like to do with this is I'm going to up this to 15, 17, 20 in terms of my PE ratios, which again, the 20 is lower than that. And as time continues, the growth rates of AMD will decline over time and therefore lowering down the PE numbers. So it won't warrant a higher PE as time goes on. As you can see, the PE currently is 36.91 at 27. So we've got a high end of 20, which I think is kind of reasonable here. And the next thing you want to do is your annual return. Now, I generally like to do 10%, 12.5%, sorry, because I can get 10% just investing in the S&P 500. So I'm going to do that actually, 12.5, 12.5. And then again, it gives me a margin of safety if I'm just that little bit wrong in terms of the value calculations I put, because they could come in at, I don't know, 22, for example, and let's say I'm looking at the high assumption, I'm putting it at 22, this 12 and this extra 2.5% is giving me that extra margin of safety, which probably nets out at 25, for example. And again, with the PE being lower than probably what it's going to trade at 22, 23, again, gives me a lower fair value than what it probably might be. So when you do that, what it does, it gives you a table view of what that is or what your growth rate is over the next 5 years. It times it by the multiple you gave it, and then it works backwards your average return that you want per year to give you today's price or the fair value price based on the assumptions. As you saw, uh, and this table is given in a pictorial kind of line to kind of show you what it should be over the next 5 years. So this is the fair value based on your high, medium, and low assumption. As you saw, when I was changing the figures, the lines were moving because it changes it based on what assumptions that you put into the model. So if you believe the analyst estimates of a 28% growth rate, a 20 PE at 12.5% return, this is saying that the fair value of AMD today is around $90. And at the low end, we're looking at $43, and at the mid end, we're looking at 59. So for me, kind of where this low was, the low point of AMD was 71.60. And again, it looks like here you can kind of see, if I kind of draw this line over here, we've kind of got some good support at this level here, where I think this probably, based on this analysis that I've just done, would have been a nice point to kind of, start selling puts at this level or start accumulating shares at this level. And again, obviously, we didn't know that this was going to happen at this point, and AMD could have continued to tank. But the key here is that when you do this analysis, you are comfortable to at this level because at the high end we're below the high end and we're near enough the mid end. Again, 59 to 70, yes, that is a $20 difference on a 70 odd dollar stock, but it's within that range or within the high to medium range. Ideally, if we can pick something up within this range, if you look at something like Facebook, which is where that is currently sitting, I think it's sitting below the low assumption, to be honest. That is where we kind of need to be. So what I'm looking at here, I might even start looking at AMD or start selling puts at AMD. If it ever did get back down to this level or break this level, this is where I'll start getting interested in purchasing shares of AMD, because even though they offered weaker guidance than what was there for Q3, I think AMD's a solid company. And again, with these fair values based on their earning projections, even on the medium end, which is at 20% as opposed to the 28, 12.5% at 17 PE, I think it was. And if we go back to here, we're nowhere near a 17 PE in our estimates. And I could be lowballing it. It could be a lot higher, and we could be under fair value, and fair value could be here. But as a value investor, you want to play worst case scenario. AMD is not one of my high conviction plays, so I'm willing to either let AMD go or let AMD come to me to determine that factor. So, I really hope you like this video. Again, there's other trading view videos, indicator videos on here on how to find out intrinsic value and all that kind of good stuff. So I hope you enjoyed it, and I shall see you guys in the next video.